Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Monday. Let's take a look at some legacy charts and information. I'll start with the usual flows from James at CoinShares. On the week globally, we are just under $1 billion in the inflow department. I thought it was interesting of all the things to look at each week. I always pay attention to ETH, Solana, multi-asset, just to see if that sentiment matches what we're seeing on a day-to-day basis, and we certainly are. It's not a huge differential here between ETH and Solana, but we're clearly seeing money coming out of ETH and into Solana. Again, not by a wide margin, but the differential's there for sure. Obviously, Bitcoin is leading everything, and this is just a snapshot of dominance, right? Bitcoin dominance, Sol dominance, ETH sort of losing to everything else. You know, that's matching what we're seeing on a daily basis here, price-wise. CoinShares also put out a mining research report. If you're deep in the mining ecosystem or not and want some more information, definitely worth checking out, giving that a read. I'll put that in the description of the video. The 30-day rolling cumulative flows for the ETFs have remained positive. And again, we're not going to see just crazy price reactions based on flows because there's all sorts of things going on. Different types of trades, different types of multi-asset strategies, arbitrage, etc., etc. But at some point, the dam is going to break, likely around 71, and we should see a bullish price reaction from there. This is what 2020 looked like. It was months, basically the whole year was just continuous drive higher in 30-day cumulative flows. And only after the breakout did those kind of settle down. So if you're bullish, what you want to see, obviously, is continuous inflows here. Looking at the annualized basis, this is basically looking at the size of the ARB opportunity. It's currently at 8%. It's kind of hovered around 8 to 10 for a couple months here. And if you subtract out the risk-free rate, which is basically the 10-year yield, then you get a pretty decent trade out of this for these hedge fund shops that look for these type of opportunities, right? They don't want to go net long on BTC, but they're looking for arbitrage opportunities. Millennium is one of those shops if you ever see them pop up in the news or if you see them on the top of a list holding the ETF. This is why they're holding the ETF most likely. They're holding it for the arbitrage opportunity. Open interest still high. I have no issue with that. CME options volume also ticked up a little bit here, probably something to do with the election that's coming up in the next week. I thought this was an interesting chart too, marrying gold and BTC. If we look at the gold colored line here on the left chart, this is the Bitcoin market cap divided by gold. And it gives you a sense of a different type of power law fit for where this could be headed, assuming this snaps to the mean, which I believe APSK is saying at 147, and how this has looked over time relative to gold versus how we look now. And you can obviously see gold down here with the cup and handle I mentioned yesterday, huge breakout. And almost always you're going to find that when fundamentals and technicals align, that's when you get the most powerful moves up or down. So gold is definitely benefiting from that over the past couple weeks. I think I've finally settled on it. This is my final submission for what I think this might be or act or behave as. It doesn't really matter. It all comes out the same. But if we take the depth of the consolidation since June, because realistically, I think that's when things changed a lot. We had this opportunity here to set ourselves up for some continuation, and then Germany came in. Now we had more selling from the US government and more selling from everything else. And so looking at this piece by piece, it's maybe more appropriate to say we've actually had this range since June. And again, it doesn't matter because it measures the same. But whatever this is or could be, 80s makes sense on the breakout. Again, the breakout level is probably most convincing to everybody at 71. And anything beyond that, everyone starts to wake up when we get these all-time high headlines. You know, that's, at this point, most people know what Bitcoin is. And when they see Bitcoin at all-time high, that isn't necessarily going to mean that they're going to go out and buy it. It's just, oh, why is this thing at an all-time high again? What does that mean, right? But it certainly doesn't look bearish. It doesn't look toppy. All this can change with the election, obviously, but just based on technicals, it looks great. Yesterday I was talking about MSTR and the Williams fractals, and I neglected to show the Williams fractals on the video. This is the daily MSTR chart with the cloud. So the breakout here was mid-September. And post-breakout is when you want to use the fractals. So for using the fractals now, the current stop loss is, let's say, 205-ish, somewhere in there. But we have not tripped a daily Williams fractal stop loss yet. The last time we did that during an active trend was here at 150. You can see it again here at 145. You can see it over here, fractal, stop loss over here again at like 140. So that's the type of behavior you're looking at for an exit signal using this indicator. Obviously, if you've got some crazy angry candle or set of candles or chart pattern, or this thing just looks too parabolic, yeah, I mean, that's also reasons people tend to close trades, but doing it in a systematic way, you're pretty far off from hitting any Williams fractal at this point. And MSTU, the 2x MSTR product, is now up 237% since launch. And it's got to be pretty rare for a product to launch and proceed to move over 200% in this amount of time. Usually when we get product launches, even IPOs, you know, there's all this hype and then it sells off, or it takes a while for the product to actually get launched. There's like the initial ideation of it when the move happens, right? It's like, oh, there's this 1.75 product, MSTR is popular, we think it can gather assets. It takes a long way from there for the product to get applied for and regulators to approve it, et cetera, et cetera. That's why to see this is extremely, extremely unusual, but good for them. I didn't pull up the flows, but the flows I'm sure are banging lately, along with MSTU. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. For some reason today, the only two things that are green on my list on the altcoin side of things are Doge and Rune. Now, Doge kind of makes sense if it's like an Elon Trump trade. BTC up, obviously, that makes sense. If, again, we're talking about a Trump trade, but for the most part, many things on the list, at least since yesterday, not on a 24-hour rolling period, are rather angry today. So Doge doing great. It's a new multi-month high for Doge. Nothing new there. We've been talking about that on this channel for quite a while now. And Rune, I mentioned yesterday, it still looks better than almost everything out there. If you remember correctly, or if you remember at all, last year around this time, Rune was actually the first to move well before Q4. So I'm kind of wondering if that's what we're seeing here now. For whatever reason, that Rune is moving ahead of the pack. No guarantee that everything else moves with it later on, but I do remember how early on Rune was on the breakout relative to everything else. So it's above the cloud, it's above the 200. It looks great. It's trying to make highs. You know, everything else, if we go to like, say, for instance, right, it's curling down, doesn't look as strong, losing momentum. And then there's plenty of other stuff that is just at lows, sitting at lows. Doesn't look like anybody cares about it at all. And this is where most alts fit, in a general state of uncaring relative to everything else. If anything, it's interesting that Sol is also kind of flat today, but I think this is going to actually continue as well in a big way. So the leaders should keep leading. The laggards probably keep lagging in the altcoin department. Looking at the economic calendar for the week, lots of stuff jobs related this week, PCE, GDP as well, JOLTS tomorrow, and then the unemployment report on Friday, which Bitcoin will probably react in some way, shape, or form, depending on if this holds at 4.1, drops to 4.0, or rises to like 4.3. Because of the weather events, it's possible that this bumps higher. Because of the strikes, it's possible this bumps higher. Longshoremen, Boeing, I mean, it's hard to know when that stuff gets baked in, when it gets removed. So that is one way it could be explained away. If this bumps up to like 4.3, we could say, well, it was X, Y, or Z, that's why. Let's see what happens next month. But I can't imagine markets are going to be happy if unemployment keeps rising. Looking at the FedWatch tool, for the meetings. We do have a meeting a couple days after the election. It's possible we don't know who the president is by the time the meeting is live. Nevertheless, we're currently pricing in a 25 basis point cut regardless, basically a 100% probability. This may change with the unemployment data, but it would be unusual for this to change enough to change the Fed's opinion or the market's opinion a week out from the meeting. That's not something we've seen historically. Usually by the time we're a week out, it's pretty much locked in. This is what the market is expecting, and the Fed doesn't really want to spook the market. So we probably get a 25 basis point cut on the 7th. Looking at inflation, it is a bit concerning that trueflation has popped up as quickly as it has. It took months to get this thing back down, sub 2%, and then very quickly after the Fed cuts rates, in a real-time sense, trueflation just pops right back up, right? It just crushes months of gains we had on inflation coming down. There is a world which trueflation is higher than the inflation data. The inflation data currently is estimated to come in around 2.57. That would be for this month, so not the current data you're seeing on trueflation, but it's pretty close. And it'll be interesting into 2025 if inflation does reignite and we see a divergence here for the first time since post-COVID, where trueflation starts taking off and CPI would be lagging trueflation. I don't think the alarm bells would start to ring until we're probably well above 2.5 on trueflation. Anything with a 3 handle on it would probably be problematic on the CPI front. But for now, it appears as though the market's more concerned with jobs than CPI. And that handoff may switch going into next year. Even though we're not at the 2% target, even though we are rising month over month, the main concern is definitely unemployment. Looking at one component of inflation, gas prices in the US continue to hold at their lows. We did see oil come way down after Israel decided not to target Iran's energy infrastructure over the weekend, which should continue to help keep gas prices low. I mean, that's what it comes down to across the pond here. GDP also looks fine, well above 3%. We get another print tomorrow on the GDP now. I think we also get a finalized print from last quarter, I think. But as long as this doesn't get mega crushed, markets should be fine with it, wherever it sits. I haven't talked about reverse repo in a while. This is kind of part of the liquidity conversation, but from 2023 into 2024, we had $2 trillion effectively come out of reverse repo and into markets. Reverse repo is just this inert pool of money that is outside of the ecosystem. So currently we're down to 227 billion from over 2 trillion. The next slug of liquidity is going to have to come somewhere else, right? Is it going to come from money printing, rates coming lower? We'll see, but it's not going to be the reverse repo. One thing to watch for is if the reverse repo gets low enough, we may see some action by the Fed or somebody to try to get money back into the reverse repo. This is kind of like the bonus pool where money can get pulled from. And if that doesn't exist, then there's some concerns of liquidity in the ecosystem just generally. So it's low, but I wouldn't call it dangerously low just yet. Looking at yields on the US yield curve, the pink is right now today. You can see the belly has come way up from the past couple weeks. The long end has also come up from the past couple weeks and is certainly at the higher end. I'd imagine anything above 5%, and somebody's going to have to take action somewhere because that's going to start breaking things. So what do we not want to see on inflation? Probably anything above 3. We don't want to see the 10-year above 5%. And we're going to be threading the needle here into 2025. But the front end should continue to come down in November. And we'll see what happens after the Fed meeting. But the curve, just in general, is flattening. And it's starting to normalize from the deep inversion it's been in over the past 2 years. Looking at the yield curve in the white here, the 10-2 curve is now positive, which looks like it's going to continue to hold with rates coming down and potentially wherever inflation goes here. I think it's unlikely for this thing to reinvert anytime soon. And so the next stage here is, okay, do we get a recession or not? Is this yield curve on inversion predictive for a recession or not? Looking at the 10-3 curve, this is actually still negative. So we do have a little bit of time based on this interpretation of the curve. Looking at the bond complex, the long end has gotten smoked price-wise because yields have gone higher since the last Fed meeting. 7 to 10 year also lower, 1 to 3 year lower price wise, and then the aggregate blend also lower. So from a risk on, risk off perspective, it's probably best to see this stuff get crushed. But again, there's a limit, right? We don't want the 10 year above 5%. That would not be bullish risk assets, I wouldn't think. But it's also probably more bullish risk assets that these don't look as bullish, these don't look as attractive from a technical perspective as they did a couple months ago. And it's going to be interesting to see what these look like in the first week of November and the second week of November and into 2025. If collectively everything here just doesn't look attractive relative to risk, then it becomes an easier conversation to hold money in risk relative to this stuff, which has just been losing and can't stop losing. I mean, this is a failed Kumo breakout. If this were anything else, you'd say, okay, that's it. We'll try again later. But the TLT is not the move at the moment. The dollar has also continued to rise along with yields. It is in bullish territory on the cloud, and it is somewhat concerning that risk markets don't seem to believe the dollar, or there's just a disconnect here, because in general, we are inversely correlated to the dollar on the Bitcoin front. So if this strengthens, you would think it would be harder for Bitcoin to break 70. If this weakens, it should be easy for Bitcoin to break 70 because Bitcoin held its own as Dixie went from 100 to 104. The issue here now is the trend is clearly bullish from being clearly bearish, but it is still in its mega range from 108 to 100. And we'll see what happens with the election. But it feels like the market collectively went from pricing in a certain recession in the near term to pricing out both dollar weakness and a recession in the near term. Now, oil continues to look bearish on technicals. And we can talk about 90, 100, 360, whatever people are talking about to the top side. But that's not what you see on the technicals. The technicals remain bearish and in bearish territory. And this doesn't need to continue crushing lows. But from an inflation perspective, it doesn't look like we need to worry about oil in the near term. Until it's basically back above 85, it doesn't seem like it's that big of an issue here. And the doomers will say, well, it's either going to 360 or it's pricing in a global recession because it's so bearish. Okay, like you can't win, I guess. But from an inflation perspective on an energy front, there doesn't look like there's some massive risk of energy reinflation at the moment. Looking at the S&P, looking at the Qs, both of these probably just waiting for the election, waiting for the Fed meeting, waiting for a bunch of uncertainty to clear with the jobs picture. So almost regardless of the numbers, we probably just do nothing until the second week of November. There's going to be some movements based on election results the day after the election. We probably won't have the results until Friday at the earliest. So there's just going to be a lot of reasons for a lot of people to just do nothing and just wait. And so that's probably what we're seeing now as price just waits and sits here. I talked about Apple, Google yesterday. Both those look great. Even Tesla looks okay, but that's again a Trump trade. But those are both going to move the indices higher or lower because there's such a large component of both of the indices. But as it sits here, it leans bullish, looks fine. Some of the other neglected charts that I haven't talked about in a while, PayPal quietly just keeps on trucking back into bull territory for the first time since 2021, getting a weekly bullish flip here over the next couple weeks. At some point, you'd think this would check back into the 70s. I don't think it's just going to go straight up from here, but this chart looks amazing compared to where it was. I don't have Zoom or Peloton in today's chart deck, but even those look okay in the cloud based on where they're at versus where they've been. And that's a very good sign for the risk side of the spectrum. It's a very good sign for altcoins, honestly, if some of that other stuff can start to pull up. This is Square on the weekly. And for the past couple weeks, it has closed above the weekly cloud for the first time again since 2021. So a lot of these fintech companies starting to wake up. Toast, another one I don't have today, also back at highs, looks good. In their own way, these are also crypto adjacent. PayPal, Square, Nubank, a Brazilian bank at all-time highs, really connected with the Lightning Network. Looks great. There's no complaints here on this chart whatsoever. Hood is another one, crypto adjacent, obviously, back at multi-month highs, broke out of its mini cup and handle down here. I think the level everybody's watching is probably 40. That was sort of the floor post-IPO before it took a precipitous drop lower. But we've gone from Wyckoff accumulation to markup, and that's where it is. It looks good. It's a lesson in patience, if nothing else. So nothing bearish there whatsoever. And as far as the miners, the inverted head and shoulders has played out on a lot of these charts. What I liked about this was we were seeing this multi-month pattern just below the daily cloud. And as a group, you had some leaders, some laggards, but in general, a lot of what we were seeing on many of these charts in the mining front was this triple bottom fractal. And at this point, it's almost close to its target from the chart pattern. Now it can obviously continue on a trend basis, and the cloud hasn't even flipped bullish yet, but the pattern has played out on a lot of these charts. Now core's sort of leading everything. You got to be careful of this rising wedge possibility, but this chart still looks great relative to everything else. Definitely one of the strongest out there. Wolf looks excellent. I'd imagine 13 would be a near-term target, which is a 2x roughly from here. Definitely one of the better looking charts still relative to the group. Even CleanSpark starting to form another clean case for an inverted head and shoulders just below the cloud. I'd imagine most of these are kind of waiting for the election, because I don't think a Harris victory will be interpreted as bullish for miners specifically. IREN with a bullish Kumo breakout today. Similar to Wolf, there's probably some sort of imaginary diagonal that this reaches for. Maybe it's 18, 20, something like that. But that's a fresh breakout for IREN. Cypher also back above levels last seen in July. Full retracement had one of the better inverted head and shoulders fractals. Looks great on that front. BTBT has this multi-month something going on with it, along with this near-term triple bottom that it's breaking out of. And then lastly, hot, very similar, multi-month something. You know, there's something here. Every time it tries to break down, consolidates. This was a W, this was a triangle, this was an inverted head and shoulders. And as it gets maybe above 18, above 20, it gets a little bit more convincing. But I think my biggest fear is that the markets are fully pricing in a Trump victory here. And if that doesn't happen, the markets are going to get angry. So that's the biggest risk, is post-election blues relative to the current expectations. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.